The ECB opted to leave interest rates unchanged at 0.5% today, a largely expected decision. But was the press conference any less surprising? Anders Svendsen of Nordea Markets is on the phone with me now. Thanks for joining us, Anders. What for you were the major headlines out of Mr. Draghi's speech?
I think the major surprise was the reluctance from the ECB this time to promise more action. After the May meeting, I think people were expecting, and I was expecting, that even though they had no cuts in store for today, that Draghi would be much more dovish and be much more ready to act and much more fiercely fighting to kickstart the recovery in Europe and so on. And on the contrary, he was much more, relaxed, and there was less sense of urgency, I think, in the press conference this time. Basically, nothing new in the statement as such. Maybe the ECB is slightly more upbeat on growth, citing the improvement in survey data, slightly more downbeat on inflation, saying that it can be volatile in the near term, but they will look through it. But all in all, I think they gave a less clear picture of an ECB ready to act this time than in May.
What would you say to comments that ECB President Mario Draghi was less Super Mario and more plain old Luigi, defensive, overly long answers, explaining deflation rather than addressing concerns about the recent dip in figures? Not quite the performance we're used to.
No, there's some truth in that, of course. But of course, he didn't have anything with him today. I think there's a difference between his performance when he has something to deliver and when he has less to deliver. I believe that Draghi may be part of the more dovish camp in the ECB, and maybe today's performance reflects that he would have liked to have something more to offer to the audience and to the markets today. So that could be one explanation, at least.
Again, though, we did receive hints regarding the implementation of negative interest rates on bank deposits. This measure seems to be being hailed as the metaphorical starting gun for the use of unconventional measures to kickstart the European economy. When are we likely to see negative interest rates brought into play, and what response will it actually have?
I think there's one step ahead of a negative deposit rate, and that's one more cut in the refi rate. Basically, the ECB will look at the numbers from month to month, and I think the barrier is fairly low for a refi rate cut. It could only be 1 month of disappointment, and I think the ECB will be ready with a refi rate cut. The barrier to cut the deposit rate, I think, is somewhat higher. I think we need to see several months of disappointments, maybe increased risk of deflation, and the actual effect it would have is pretty small. I think it would have an effect on market rates in the short end. It would certainly lead to negative overnight rates and probably negative rates a bit out on the curve. But again, it's a few basis points. It will not be the turning point for the euro area if the ECB is to cut the deposit rate. I much more think that a cut in the deposit rate could come if, for instance, the euro starts strengthening significantly for some reason, because a cut in the deposit rate will certainly have an effect on the euro.
While the decision to hold rates raised any advance in European stocks, the euro received a boost, rising close to a 4-week high against the dollar. How strong are concerns that a euro uptrend could replicate the Australian dollar and damage business and exports in the region?
If it was to happen, it would be a major concern. That's clearly not what the euro area needs at the moment. I think the euro area is still the weakest, or one of the weakest points in the global economy, at least among advanced economies. So to me, it's more a mystery that it hasn't weakened more already. But as I said before, if the euro were to strengthen significantly and maybe even over a short time span, then I'm very confident that the ECB will act, first of all, by cutting the refi rate, and then secondly, by cutting the deposit rate, because that is likely to have a really big effect on the currency. at least in the short term.
That's all we've got time for right now. Click back for more exclusive interviews. Goodbye for now.